a statement here for you. Transactions, costs and taxes are often cited as reasons why short-term trading isn't as profitable as long-term trading, and there are many papers published on the subject. But spread betting is tax-free and bid-offer spreads are very tight compared to a decade ago. Please comment.
All right, so definitely spreads are tighter than from when I started out. And just to be clear, the spread is the difference between the buying and selling price. So that means the hurdle you need to jump to break even. So if you buy something at, say, 136, which is the offer price, and the sell price is 134. So if you buy it now, you're instantly in a loss because you've got to make at least 2p or 2 points before the spread will come that you've actually made, and that's obviously the profit margin that they're making. And those spreads have become narrower and narrower. A couple of things: technology, competition. There's a lot more firms that are out there, and people just literally, if you're not offering a fairly tight spread, they'll say, "Oh, well, see you later, I'll go somewhere else." So yes, costs have come down. The other thing that's happened, Alex, is interest rates. When we take a spread bet, we're actually taking a loan. Now, back in the old days when interest rates were 7-8% in the UK, and in fact some spread betting companies used to pay interest on your cash, but that's long when, there's a financing cost. Now there's still a financing cost now, but because interest rates are so low, that's relatively low. So you're right, the costs of actually dealing are still low, but there's still a cost involved. And if you keep buying and selling, you've got to make money just to break even. So that's a point where sometimes they say longer term traders do better. So the answer to that basically is, if you keep trading a lot, you've got slippage, you've got costs that basically are being built in. So watch about over trading, but it's not as big as it used to be.
What about requotes and rejections when trying to place a trade with a provider?
Okay, so requotes and rejections normally happen either there's a technical problem or the underlying market, they can't put the trade through the market. And the reason why you're getting a lot of this is because you're probably trading a smaller company. Again, in the US, we don't get that often because going back to the US stocks, they're bigger, they're more liquid. So the reason why they're requoting you or a rejection, it will say, we can't put this trade through. And there's a reason why the computer can't put the trade through, and normally it's because there's either the feed that's coming in, there's a problem, or there's just no liquidity in the market. If you stick to big stocks, you will very rarely see that.